Ever found yourself wondering how loans and credit cards work? Today, we're going to demystify these financial tools that play such crucial roles in our lives. Loans and credit cards, they're more than just plastic cards or a lump sum of money. They're tools. Tools that can help us achieve our dreams, be it buying a house, a car, or even funding our education. They can be a lifesaver in emergencies when savings might not suffice, but like any tool, they need to be handled with care. Used wisely, they can be the stepping stones towards financial freedom. Misused, they can lead to financial distress. Understanding these financial instruments, their purpose, and their impact on our financial health is key to financial planning and management. It's important to navigate this financial landscape with knowledge and confidence. So buckle up as we dive into the fascinating world of loans and credit cards. First off, what exactly is a loan? A loan is money borrowed with the promise of returning it in full, along with some extra known as interest. The idea behind a loan is not just to help in times of financial need, but also to enable investments such as buying a house or starting a business. Loans come in many shapes and sizes, each suited to different needs. Personal loans can be used for a wide range of purposes, from paying for a dream wedding to consolidating debt. Then there are auto loans for buying vehicles and student loans to cover education costs. And of course, there are mortgages, the big ones used to purchase property. The cost of borrowing is determined by the interest rate. This is the percentage of the loan you'll pay in addition to the amount borrowed. Lower interest rates mean less cost to borrow, which is why it's so important to shop around for the best rate. But interest isn't the only factor to consider. The length of the loan, known as the term, also plays a big role. Longer terms mean lower monthly payments, but more interest over time. Shorter terms mean higher monthly payments, but less interest overall. Before signing any loan contract, it's crucial to read and understand the terms. Know what you're committing to. How much will you pay each month? Are there penalties for early repayment? What happens if you miss a payment? These are the questions to ask. Also, consider your ability to repay the loan. This means looking at your income, expenses, and financial goals. Remember, a loan is a commitment. Once you sign that contract, you're legally obligated to repay the money. Finally, don't forget the power of negotiation. Interest rates and terms are often flexible. A better credit score can give you more negotiating power, but it's always worth asking if a lender can do better. Remember, knowledge is power, especially when it comes to borrowing money. So take the time to understand loans. It's an investment that can pay off in a big way. Now let's switch gears and talk about credit cards. What's all the fuss about? Just as a car functions to get you from point A to point B, a credit card is a financial tool designed to help you make purchases. However, unlike a car, a credit card doesn't require you to have the full amount up front. This is where the concept of a credit limit comes into play. Your credit limit is the maximum amount you're allowed to borrow from the credit card company. But here's the catch. While a credit card gives you the convenience of borrowing money on the fly, it also charges you interest on the amount you borrow. This interest is a percentage of the money you owe, and it accumulates if the owed amount is not paid in full by the due date. Now you might be thinking, hey, that sounds quite similar to a loan. And you're not wrong. But unlike most loans, which have a fixed repayment schedule, a credit card offers you the flexibility to decide how much you pay back each month. You could pay off the full amount, make the minimum payment, or something in between. However, this flexibility does not come without risks. Paying only the minimum each month could lead you into a cycle of debt. As interest accumulates, your debt can grow, making it harder to pay off. This is why it's important to be diligent about making timely payments and aiming to pay off your balance in full each month if possible. Remember, using a credit card is not about spending money you don't have. It's about using a financial tool to your advantage. Every swipe, every payment, and every interest charge is a step in your financial journey. And just like any journey, it's essential to navigate responsibly. And let's not forget, credit cards can be a great way to build a good credit history, provided they're managed well. A good credit history can open doors to better loan terms, lower interest rates, and even more rewarding credit cards. With great power comes great responsibility, and credit cards are no exception. Heard about credit scores but not sure what they mean for you? Well, let's dive right in. A credit score is essentially a numerical representation of your creditworthiness, or in simpler terms, it's a measure of how well you manage your money. Lenders, such as banks and credit card companies, use this score to evaluate the risk they take when they lend you money. Now, how does this impact your financial health? Think of your credit score as a report card for your finances. A high score can open doors to lower interest rates on loans and credit cards, which can save you a significant amount of money in the long run. On the flip side, a low score can make it harder to secure loans and could lead to higher interest rates. Your credit score is influenced by your financial behavior. Responsible usage of loans and credit cards can positively affect your score, while late payments and high debt can have negative effects. So remember, your credit score is a reflection of your financial health, so keep it in check. So, what have we learned about loans and credit cards? We've unpacked the world of loans, highlighting the importance of borrowing responsibly. Remember, loans are tools that, when used wisely, can help us achieve our goals, whether that's buying a car, going to university, or purchasing a home. We've also dived deep into credit cards, underscoring the need to understand the fine print. It's essential to be aware of interest rates, fees, and the potential impact on your credit score. Remember, credit cards are not free money, but a means to build a solid credit history. Moreover, we've emphasized the significant role credit scores play in our financial health. A good credit score can open doors to better loan terms and lower interest rates. The world of finance may seem daunting, but with knowledge, it becomes less intimidating. So keep learning, ask questions, and make informed decisions. Remember, understanding your finances is the first step towards financial freedom. Happy navigating.